Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you some trading levels for the equity indexes for the upcoming week of November 20th, 2023. We'll cover the equity and a couple of the major equity indexes. We'll also cover the bonds. Before I go on here, as always, the usual disclaimer: everything I'm going to talk to you about here is for educational and informational purposes only. Precision Trading Labs, we are neither money managers nor financial advisors. So let's take a look at the charts here. So here we're looking at the SPY here, and so here's where we were last week. This line here on the 10th. Before when I had done the video from the prior week. And so we can see basically we had this gap up here Tuesday, and then we've more or less been kind of consolidating at this region up here. So at the end of last week, we were sitting at around 441 on the SPY. We're now sitting just around 450. So that was so there was about a 10-point move last week, and really it was all pretty much almost all in one day. And then, like I said, the last 3 days there was just some consolidation here. This is all part of this bigger move that has happened since the end of October, when we had actually entered into correction territory. We were down about 11% from the region. From the high point. This was sitting right at the end of July. And so we had done about this 11% move down, and there was all kinds of big talk. We were in a correction and all that made the news. And ever since then, of course, there's been this recovery where we've recovered just about all of that. So that's where we're sitting now. Last week, we had actually had this area of supply here, where we thought we would actually get a short or a bearish trade out of that. As it turned out, Monday we had this consolidation day here, and then the next day on Tuesday, the SPY just hopped right over it, gapped over this. So this area of supply just got negated here. We had originally thought that this was going to be a nice area for a bearish trade, but that did not come to pass. In terms of what a supply zone is, this is an area right here, and let me just blow this up here. This is an area where we had price dropped. It consolidated with these two very kind of indecisive candles in here. And then you had a bearish move that came out of that. That's obviously a much larger red candle. And so that's a very bearish candle. There was a gap, and then another very large bearish candle here. And so this was an area where we thought we were going to get a bearish trade when price returned to the region. That did not come to pass because of the gap. All right. So in terms of let me just in terms of defining that again. So this is an area which we refer to as a supply zone. This is an area of expected downward price pressure. It's created by a brief period consolidation, which you can see right there. And then there's a clear, abrupt exhaustion of buyers here. Okay. In this region, buyers and sellers were in agreement during these 2 days following this drop down. And then, of course, there were no more willing buyers after that. And so essentially for these trades to occur, the sellers had to run down the price chart until they found willing buyers. Okay. So that's the narrative associated with this. And then the expectation was when price returned here, we would actually see another smackdown from here. That did not come to pass because of market expectations. They, obviously we just gapped over that. Okay. But that's what a supply zone is. Okay. We've now actually created a demand zone over here where there's a rally price based over here. It consolidated. And then, of course, we had that gap that I just described. So the expectation is when price returns here, this is still an area that people want to buy, and it was only in here for a very brief amount of time. This represents an exhaustion of sellers here. Okay, in the same way that the supply zone represented exhaustion of buyers, this represents an exhaustion of sellers here. Okay, and it's the same narrative again. When the price returns here, we could be looking for a bullish trade out of there. Okay, so in terms of the SPY, with respect to distances here, Right now, the next clean area of supply is right here. Okay, we had this one gap over here. Okay, we talked about that. Up here, this is an area of resistance, but it's not clean supply. And you can see we're now kind of camped out at that area here. Price could go in here. It could roll over from here. But in terms of the highest probability trade, the highest probability trade for us, we're going to be right here because the price has not been back there since. Over here, you can see the SPY has been back here any number of times. And right now, it's camped out here again. As I said, it could roll over here, but we would tend to want to be a little more patient and wait for this zone here because the price has not been back there. So this is a clean area of supply. All right. So in terms of distance, you can see this is only about 1% higher from where we are now. That's about 5 points on the SPY here. So we're basically about 1% down. This is about 4.5 points up. And then in terms of this demand zone under here, this is about twice as far. Okay, and you can see right here we closed at 450. We're now at 440. So this is about 10 points down. So this represents a bit over 2% in terms of distance. So that's where we are on the SPY. If we take a look at the Qs, okay, right here, in a sense, some of this looks a little similar here. Here was that daily supply zone here. Again, price hopped up, went right to the top of that zone, but it's really the same story as what I mentioned on the SPY. Right now, we're sitting up here, and this is an area of supply that, excuse me, of a resistance, and this has actually been hit any number of times. If we go back in time here, let me just throw some more data in here. We can see that we've actually been back there any number of times here. So let me just roll this back now. Okay, and you can see we've been in here before. This was a clean area of supply before. But now that we've been back there, this is no longer fresh supply, and it also drove all the way into the back of this level. So if and when when price gets back in here now, where it is here, I don't necessarily expect this to roll over. This, in fact, if the market is showing some strength, we're right now at the 52-week high on the Qs here. This could actually be an area for a breakout. Because of the fact that this is, some people might think that this might be, you had a double top here. This is now a triple top that's forming. It's quite possible that they could be right. But if in fact we see, if we see the futures open on Sunday night with some bullish energy there, it's almost certain that this level will probably break. At which point this could actually be we could actually be positioned for a breakout here. Now, whether it's a large breakout that takes us to the next area of supply, I wouldn't say that at all. But I'm not optimistic that this level is going to hold here. Okay, so that's the discussion of the Qs here, and we can also see just as an extra thing here, we're now sitting above these 4 key moving averages that we also we kind of monitor here. Right here is the 50. Right here is the 200, and then we also look at a couple of short-term moving averages as well for shorter-term momentum. So right here, in terms of demand, right here, this is a clean area of demand down here using a 2-hour chart. Okay, and if I turn this into a 2-hour chart here, we'll see right here. Okay, here is where we closed on Friday. Okay, and right here, here's an area of demand here, but this is actually, I think, a better area right here, where we had a drop, a base, and in fact, you see this very clearly in the 1-hour chart, and we can see the consolidation right there. Price comes down, consolidates right there. Notice then we have that gap, and then this thing really rockets out from there. So this would be an area where we would be looking definitely for a bullish trade out of this zone. This is a a possibility here. This is kind of an in-between level. There's also a lot more candles going on here, and structurally it's not as clean as this. But I think this is a reasonable level as well for a bullish trade. When price gets down here, we'll obviously monitor that. So in terms of where that is at around 377 and change, down to 375, a bit over 375. So it's about a 2.5 point range on the Qs here. Okay, so in terms of distance, this one's about 2% down from where we closed on Friday, and then this other one down here, which is really the better level. That's around 3.75% down there. All right, so that's the Qs. Last thing we'll take a quick look at are the bonds, the TLT. So here's where we are in that. Let me go back to the daily chart here. So here's where we are on the daily. Okay, here's where we closed, and we closed at 90 on the TLT here. So the next area of clean daily demand, daily supply here is sitting here at around 92.80. In here, this is a lower time frame demand zone, supply zone, pardon me. And that sits around here. And if I change this into a 2-hour chart again, we should probably see a good area of supply in here. So notice now price comes up here, rallies. Okay, we get that area of consolidation, and then notice, of course, that major drop from there. Okay, so this is an area of supply that's sitting right there in the 2-hour chart. Okay, and so that is sitting here. Let me just update I'll update the quantities here. So that's sitting here at around 91.25 to 91.60. So that's actually kind of a small level there. So we could be looking for that. It's quite possible, the level like this could definitely hold. On the other hand, everything kind of has to go right for this to work, because of the fact that it is a rather narrow, rather shallow level there. That's less than 0.4 on this. So that's a rather shallow, kind of a shallow level there. Okay, this up here, this daily zone up here, I'll go back to that again. This is in a sense, the quality level there. And of course, one would have to be a little more patient in terms of getting that. So one could certainly take a bearish trade out of here with the expectation, with the understanding that, kind of things, almost everything has to go right, because the fact that you're dealing with a very, very shallow distance there. Up here, this is the higher probability trade up there. Having said that, one will have to wait for that to get there, because that's about a 3% move here. So we'd have to run from about 90 to about 93 in order to get there. Okay, and then in terms of demand underneath, this is a 2-hour demand zone over here. Okay, notice price comes down here, drops, pops, and then it doesn't really go all that far. So this is this would be an area I think one could look to this for kind of a scalp trade or kind of some sort of short-term trade. I don't necessarily think that you have a tremendous amount of follow through here because the price came up here and it didn't really go, or hasn't really gone all that far from here. So from a risk reward perspective, this isn't really a great level here. After that, below, we can see that we have, this is an area of, I would think of this as more support. This is not demand. Prices come back here and then has been back here three times. So this is really not, and then at that point, then I'd be looking down here. And this is where I believe in the daily zone, the daily time frame, we're actually looking at demand right here. Okay, and then of course that's going to be a much further distance here. So I don't really see anything wonderful in terms of going long on the bonds, because this is obviously a long way down at 6%. On the other hand, up here, I think that 3% up, this would be a kind of a good area for a bearish trade on the TLT. So at any rate, that's what I got. So anyway, thank you very much for your time. The one thing I would ask also is if you go to our YouTube page, in addition to subscribing to our channel, there was also a link that I would be happy to do a brief call with you to explain a little bit more about this supply and demand concept and how we can use this to create high probability controlled risk trades. So again, thank you for your time. This is Mitch Firestone with Precision Trading Labs, and I will see you next time.